used to be the country's largest developer, Evergrande was buried under more than $300 billion of debt.
Evergrande's crisis has taken a decisive turn as its shares were officially delisted from the Hong Kong Stock Exchange.
The founder and chairman of Evergrande is being investigated for suspected crimes.
China, where economic growth is struggling, it came in at 4.9% in the third quarter.
So right now, Hui has refused to disclose his assets.
The biggest example we've seen so far has been Evergrande. It's now missing all these repayment schedules that it's supposed to be paying on its $300 billion debt.
So what does the fall of Evergrande mean for the world's second largest economy?
In 1996, Evergrande was founded in Guangzhou, China. Within just a decade, it grew into one of the country's most powerful property developers, riding the wave of China's urban boom. By the mid-2000s, Evergrande was everywhere, building entire city districts, selling millions of apartments, and even branching into football clubs, theme parks, and electric cars. But behind the glittering skyscrapers and glossy marketing, a storm was brewing. By 2021, Evergrande had racked up more than $300 billion in debt. It had become the most indebted real estate company in the world. After several failed attempts to restructure, the situation reached its end in January 2024, when a Hong Kong court ordered the company to be liquidated. Its assets would be sold off to repay creditors. Evergrande was founded in 1996 by the former government official, founder and CEO Hui Ka Yan. Starting with a small real estate project in Guangdong province, he expanded aggressively, riding the wave of China's urbanization and the country's hunger for property investment. By the early 2000s, Evergrande was no longer just a property developer. It became a symbol of ambition, promising luxury apartments in cities that were growing faster than most of the world could comprehend. What set Evergrande apart wasn't just its size, it was how Hui cultivated a sense of inevitability. If you wanted a piece of China's future, you invested with Evergrande. The company didn't just sell buildings, it created an entire lifestyle brand. There were theme parks, electric vehicles, health clubs, and even soccer teams. Hui's strategy was audacious: diversify as quickly as possible to dominate every aspect of urban living. For years, investors, banks, and local governments treated Evergrande as untouchable. By 2018, Evergrande controlled more than 1,300 projects across over 280 cities in China. It had become the largest property developer in the country, and Hui was among the richest men in the world. Home buyers lined up for pre-sales of apartments that hadn't even been built yet, and banks eagerly lent money to a company that seemed unstoppable. But beneath the dazzling skyscrapers and glittering marketing campaigns, trouble was building. Evergrande's growth was fueled almost entirely by debt. The company borrowed aggressively, often from hundreds of banks and shadow lenders, to fund new projects and acquisitions. The strategy worked as long as property prices kept rising and buyers continued to pre-purchase apartments. Evergrande became a classic example of a high-leverage empire. Hui promised returns to investors and used new funds to pay old obligations. Many liken it to a Ponzi-style structure, but on a corporate scale. Unlike a Ponzi scheme, however, there was a real business behind the empire. Thousands of apartments, commercial projects, and diversified investments. The problem was that the debts far outpaced the company's actual cash flow. For years, local officials and banks ignored the risks. Evergrande's projects were seen as beneficial for cities that needed construction, employment, and tax revenue. If there was a problem, it was assumed the government would step in. That assumption would later prove fatal. By 2019, cracks started to show. Regulators noticed that Evergrande's debt had ballooned to over $300 billion, making it the most indebted property company in the world. Analysts raised alarms, warning that the company's reliance on pre-sales and loans created systemic risk. Yet few took decisive action. Evergrande tried to cover its obligations with creative accounting, short-term borrowing, and selling stakes in non-core businesses. There were reports that suppliers and contractors went unpaid for months. Home buyers who had already paid deposits for their apartments faced delays or uncertainty. Yet Evergrande remained an object of fascination and fear. Its scale was so immense that people assumed failure was impossible until it wasn't. A lesser-known fact is that some international investors had quietly pulled money from Evergrande years before the collapse, sensing the fragility behind the empire's glamorous facade. Domestic confidence, however, remained high, fueled by state-owned banks and the belief that the Chinese government would never allow such a giant to fail. Let's pause for a moment. One lesson from Evergrande's story is clear. Even giants can fall when debts spiral out of control. And in investing, knowing what's happening behind the glossy surface is everything. That's where tools like The Alchemist come in. It's an automated trading platform that monitors markets and investments for you. You don't need to study charts or push any buttons. The software identifies opportunities and executes trades automatically. It's about staying informed, aware, and in control, without the stress of doing every calculation yourself. Click the link in the description and use code Evergrande for 10% off. Now back to the collapse. When the Chinese government began tightening lending rules in 2020, Evergrande's model was exposed. New regulations limited how much property companies could borrow. Evergrande had overextended itself and suddenly could not raise the cash needed to finish projects or pay off creditors. By 2022, the crisis was public.
First time since last year, it's off to a bad start. Now shares of the heavily indebted property developer plunged.
Evergrande's financial crisis continues to deepen. The company on Tuesday revealed that lenders have seized $2 billion worth of deposits from one of its subsidiaries.
News of delayed payments to contractors and missed bond obligations spread like wildfire. Evergrande's stock plummeted and panic set in. Home buyers worried about losing their deposits began staging protests. Suppliers stopped work. Lenders demanded repayment. In many cases, buyers formed local protest groups demanding refunds or that construction resume. The legal process is slow, and many buyers remain in limbo, owning a property that exists mostly on paper. Meanwhile, Evergrande quietly sold stakes in overseas assets for years, including a struggling electric vehicle division, to try to patch holes in its balance sheet. Yet even these efforts weren't enough to prevent the collapse. The lesson is clear: size and influence don't exempt a company from the basic laws of finance. The final blow came in 2024. A Hong Kong court ordered the liquidation of Evergrande's remaining assets, formally ending the empire that had once seemed untouchable. Offices were emptied, luxury projects frozen, and billions of dollars in debts were left unresolved. Many of the company's ambitious projects were left unfinished, creating so-called ghost cities, entire neighborhoods left empty, with half-built towers and deserted streets standing as monuments to overambition. Hui Ka Yan, the founder and CEO, has been accused of financial mismanagement and other charges. As of now, he is under investigation and facing legal consequences, though the full outcome is still developing. Evergrande's story is a wake-up call about unchecked ambition, excessive debt, and systemic risk. It shows how rapid growth can hide serious vulnerabilities. Even companies that seem unstoppable can collapse when financial fundamentals are ignored. For China, the Evergrande collapse has reshaped the real estate market. Regulators are cracking down on high leverage. Developers approach projects more cautiously, and investors are more skeptical than ever about promises of quick returns. The ripple effects go beyond property. Banks have become more careful with lending. Cities that relied on Evergrande's projects for growth have had to adjust to unfinished developments. Many neighborhoods remain partially empty, leaving communities in uncertainty. Globally, it's a reminder that a crisis in one of the world's largest economies can reverberate far beyond its borders, affecting markets, investors, and even supply chains worldwide.